welcome to Leaders of Tomorrow. This is a special series we're doing around Diwali 2021. What should you be doing with your money in 2022? How is Diwali 2021 perhaps going to make you richer? How should you be managing your money better? And also, what are the indicators as far as the macroeconomy is concerned? All of that we'll be discussing on tonight's show. Let's dive right in then and introduce our guests. First up, we have Chandresh Kumar Nigam, MD and CEO of Axis AMC. Also on the show, Radhika Gupta, MD, Edelweiss Mutual Fund. Chandresh, good having you here on the Leaders of Tomorrow. I want to start by asking you, if you had a Diwali wish for our entrepreneurs, what would it be? What would you want to tell them?
So first, thanks for having me here, Sunanda. Wonderful to be here and to be able to talk to your viewers. I understand they are all business people, entrepreneurs in some sense. The Diwali wish has to be something linked to their business. I hope they have a really good Diwali. Businesses are coming back on track, but I do know that many of the small businesses are still struggling, especially one which are more linked to high contact with customers, physical contact. So I just hope the Diwali wish, one Diwali wish is that this whole Corona and COVID thing just goes away and we are back to normal. And I'm sure the underlying growth of the markets and the economy and hence the business for all the viewers can get back to normal and go back to the previous trajectory of growth. So that would be my one wish, Sunanda.
The markets have been doing really well of late, Chandresh. You look at the kind of run-ups that we're seeing in the market. In terms of whether this is going to hold out or just the sector-specific performance, how are you reading this data?
Yeah, so I think it's to be put in perspective, looking at from where we have come from, the lows in March 2020. So like a 18-month period. I don't think anybody really imagined we would be here, especially the kind of news flows COVID really made. Now, having said that, I think this has been a real period, especially the last 8 to 9 months have been a period of revelation. While we obviously know that many people, many businesses have been adversely affected, but there are some which have actually benefited from this whole episode. And those benefits, along with the support which has come through from the various governments all over the world, is letting unleash a real new business cycle. Now, the longevity of that we will come to know sometime later, maybe after 4 to 6 quarters. But as of now, the level of activity is very strong all around. And we are seeing that reflected in commodity prices and essentially stock markets as well. So what does it really mean? I mean, one, earlier worries on economy because of COVID. Yes, there has been an impact, but overall some sectors doing well. 2, strong growth, base being put up, or base for a strong growth is already being put up. And I think the next maybe year or two will see very, very smart growth in large parts of the economy. And that's already getting reflected in the markets. Maybe there is more to come. And 3, I think most important is the way people look at businesses. In a world which is starved of growth, India is one of the markets where there is growth. So anybody who can exploit this underlying trend of growth in India, I think will be a real winner over the next 2, 3, 5 years. So we are in a very good place. The worst is behind us. Markets are buoyant, and I think it's now time for businesses to really take advantage of the positive developments, the positive trends, both in the economy and in sentiment. It looks like good times here for business. When it comes to markets can correct and go up and down. We've had a very sharp rally. There could be some cautiousness advised at this point in time. But taking a 2-3 year view, I think because the economy seems to be looking very strong. I think markets will yield reasonable returns from here on as well.
So speaking of the rally, Chandresh, what sectors do you think are performing well?
Yes, I think one of the things is that this looks like a very, very broad-based economic recovery. And if one were to look at the market pre-COVID and then that there was intermediary period of COVID and then post-COVID, so to say, or let's say calendar 21, what we are seeing is prior to COVID, there were only a few sectors doing well. The economic growth was fairly anemic. And in some sense, what COVID has done is re-injected optimism into large parts of the economy. The only ones, in fact, to say which have still not participated is the capital goods part of the market. But you look at metals, commodities, things which were largely ignored and had really tough times prior to COVID. I think many of them have had a strong bounce back. Economy sensitive, automobiles, etc., consumer related stuff. And obviously we do have all the IT related and new age kind of businesses, consumer discretionaries, a lot of money being spent on goods rather than international holidays, etc. So that's also benefiting many of the companies. What I would say is very, very broad participation or broad industries participating in exploiting this underlying economic recovery. There are a few sectors which may be late cycle plays. I mentioned one of them being capital goods. And maybe you're seeing a very strong holiday season as well, travel, etc. is getting back. So I'm sure even the ones which have been really badly affected, like hospitality and airlines, etc., they will also start to do fairly well. So all in all, a fairly good growth prospect for probably all industries represented in the markets.
I want to talk about your professional journey, Chandresh. Axis, of course, going from where it was to where it is now, growing under, of course, your guidance, and you've managed to grow it in just not a very long period of time, a short period of time. What's that journey been like? One or two of the key highlights that you can talk to us on?
So it's been a fantastic journey for Axis AMC. Started business late 2009, early 2010. That's when our first equity funds were launched. So in a sense, now we are a little over 11 years. And as we stand today, last 4 or 5 years, we've been one of the fastest growing AMCs. And the equities piece has been the real icing on the cake in that sense. If I were to tell you the real reason, a lot of it is to do with what we did in the first 3 or 4 years of our existence, which is to craft out a sustainable strategy for investing. I think in equity markets, there are a number of strategies, and we very steadfastly focused on high quality growth businesses, which meant that we probably looked at only 3 out of 10 listed companies in the country. So very strong focus, and that allowed us to do much better quality work, analysis, build conviction, and back these companies over the long run. Along with that was the whole concept of institutionalization. Prior to Axis, the most easy conversation or most prevalent conversation was invest with a particular fund manager, a star fund manager, so as to say. And Axis redefined that to saying that this is a lot more serious and business which needs institutionalization, and hence internal processes and culture and risk management, etc. So both these things put together, the investment philosophy plus the investment process and risk management framework, executed well over a long period of time, has resulted in a scenario where we think that all our funds have done really well. We do not have a single underperforming product from a medium to long-term perspective. And in that sense, we do not have any dissatisfied consumers.
I want to talk specifically about action that you're expecting in both mid-cap as well as small-cap stocks 2022. Can't believe, but we're just a few months away from the new year. Chandresh, how are you expecting that this segment of the market will perform?
Yeah, so I think this recovery has been a boon for the mid and small caps. I think mid caps, while they did have their periods of performance, I would say from 2013 onwards, except for 2017, a brief period, they have been generally struggling. Partly because of the economic conditions, generally tepid growth rates in the economy makes it difficult for some of these businesses to really perform well, especially when it comes to cash flow and margins. And a higher growth rate, which is what now we are seeing, has meant that some of these companies have materially improved their cash flows and return on equity numbers, and the market is kind of getting interested back again. The other thing was that during that period, 2013 to 2019, investors also had lost interest because in many of these businesses, not all, but many of these, so that interest has also come back. So both on the tailwind from the economy, as well as investor interest, because there's a lot more risk appetite, these businesses have benefited, and I think will continue to benefit.
All right, Chandresh, thank you so much for your time. I'm wishing you, your family, your team a very happy Diwali. Let's slip into a short break. When we come back, Radhika Gupta of Edelweiss MF joining us in our second segment. To stay tuned, back in just a moment. Radhika, good having you back here on the show again, talking to our entrepreneurs as part of the special series that we're doing about consumer sentiment, and also really looking forward to 2022. But I first want to start by asking you, if you had something that you would like to tell our entrepreneurs by way of Diwali wishes for them, for their employees, for their families, what would you like to tell them?
Well, I think firstly, wishing you and all your viewers, and especially the entrepreneurs and their teams, watching this, a very, very happy Diwali. I think the last 18 months haven't been easy for India, but there probably has never been a better time to be an entrepreneur. We see that in the private markets. We see you guys bringing IPOs into the public market. So many new exciting businesses and business models. So there's a lot to look forward to, and so much great work that you guys are doing. So I think congratulations, there's nothing like the spirit of the Indian entrepreneur, is there?
Absolutely, and that's something that we reference all the time here on the show, Radhika. So thank you so much for that. I want to start by decoding all of the signals, if I can call it that, on the macroeconomy at this point. And let's start with the big one, that is the announcement that we heard as far as how many adult Indians in the country have been vaccinated. We have, of course, what the government is saying is a target that it hopes to achieve by the end of the year. And you have also the entire sentiment around the festive period. Most entrepreneurs, of course, are waiting for what this could mean for them in terms of their bottom lines. How are you really reading, though, the fact that the third wave, which has thankfully not hit us so far, is, most experts are saying we're likely to see that now around the festive period, with people possibly letting their guard down. In terms of cues for the economy, how is all of this going to play out?
So I think, there are a couple of questions in your question. Firstly, I think the 100 billion vaccine mark is, the 100 crore vaccine mark is something for all of us to be extremely proud of and heartened by. I think we've done with our population size what many of our developed counterparts are not able to do in reasonable period of time. And I think, while one can't rule out the impact of different variants of the third wave, I'm not a medical professional and one can't rule that out. I think at least this puts you in good stead with, a significant part of the adult population being vaccinated, and at least talk of co-vaccine being open for children. I think this at least puts you in good stead. Even the second wave was a tough wave, no doubt. But, compared to most of the world, at least India has held up better in terms of mortality rates. And with this vaccination pace, I think that bodes well. You're right. I think the festive season, there's a mixed bag out there. I mean, one of the good things is that I think demand is back like it's never before. I just flew from Mumbai to Delhi. And I think if you look at flights, if you look at hotels, if you look at, the traditionally beaten down sectors after the first and second wave. Restaurants, consumption, I think all of them are back. If you look at many of the e-commerce players who used to do large sales before Diwali, those sales in a competitive bid have actually been preponed actually to quite before Diwali. So I think the Indian consumers' sentiment to come back and spend and buy and experience is definitely back. One only hopes that this is done with caution as more and more population hits the market. So that is definitely something to be wary of. But I think you will see consumption numbers that are very, very heartening this festive season.
Absolutely. And we've been speaking with different sectors, including real estate, which has not seen any impact due to the pandemic, or largely has not seen any impact. And all reports are pointing to the fact that this sort of strong sentiment and demand will continue. But I want to talk about, and the reason I'm talking real estate is leading to my next question, and that is as far as unemployment is concerned. If you look at the figures in September, unemployment rates have fallen even further towards 6.8 odd percent, a majority of them being absorbed by the construction in the real estate space. Do you expect this will continue going forward into 22?
I actually expect real estate demand, residential real estate demand. I can't speak to commercial as much, but residential real estate demand to pick up. I think there's a couple of things that has happened. One is that over the last couple of years, not much new supply has been created. So that's something that we have to keep in mind. Secondly, I think in the post-COVID world, what we are hearing is, and there have been some incentives to this extent, that the consumer's inclination to buy real estate has definitely gone up. So, if you could afford a 2 BHK, you're suddenly going out and saying, I'll buy a 2.5 BHK. The fact that home loan rates are also at some of the lowest levels they've been, some of the banks are putting out very, very attractive offers. I think a confluence of factors is coming together. There are people even saying that, with equity levels where they are today, real estate after sort of a tough cycle may look like the asset class. So I don't think real estate demand residentially is going anywhere. Commercially is much harder to tell as many companies transition into permanent work from home or permanent hybrid models. And as you're right, real estate demand and some of the capex that is happening bodes very, very well for employment. This was something that was alluded to in the last budget as well, but I don't think real estate demand is going anywhere.
Overall, though, on unemployment, what is your view, Radhika? Do you think that the headline figures we've seen so far are something to write home about, or would you want to be cautious on that?
I would want to wait. I would want to wait and see a couple of quarters of numbers. But as I said, my sense is that there is a broad-based revival and this could continue to sustain or get better.
Radhika, since we've just been talking real estate, I want to look at other asset classes as well. Gold, for instance, of course, a big buy around Diwali. What other asset classes, perhaps, are you expecting will see a good rally, not just around the festive period, but also going forward into the new year, since we've been talking consumer sentiment?
Okay, so firstly, I have always been a big proponent of asset allocation. It sounds like a very, very boring answer, but to anybody, I think I've been a very, very big proponent of asset allocation. As far as gold is concerned, I try to take Diwali out of it because, it of course has a festive sentiment. I think gold should be a part of the portfolio. There might be a little more case given that we live in times where you may see some inflationary pressures, but gold should be there in your portfolio as a sort of static hedge against inflation. I don't really believe in timing gold allocations. I also think that when you're an investor, you should separate out the impact of physical gold and financial gold. So I think investments are best done in the form of financial gold. Indian equities, I think, continue to be at the beginning of a structural revival, and I'm sure we'll talk more about earnings and the outlook for equities. So I think Indian equities continue to have their story. And I think one of the things that India has discovered in terms of investing trends in the last couple of years is also the role that global equities will play in your portfolio, because while all this is happening from a macro point of view in India, there certainly is a case to look at other emerging and developed markets, including the US.
What about the supply side? Because, for instance, during the first wave of the pandemic, manufacturing was not allowed. During the second wave, it was allowed, but with so many riders, do you think corporate India perhaps is in a position where it's able to meet this demand, whether it is bringing the workers who've left cities and gone back to their homes, bringing them back, onto the supply side, whether it is having made adequate investments, whether it's having had the money to have made those adequate investments towards increased demand. What do you want to tell us?
I think it's beginning to make investments. I think supply chain disruption is a reality all around the world. And it has multiple factors. I think in the last 2 quarters, post wave 2 of COVID, corporate India is starting to make those investments. And I think that is something that we are starting to see as we talk to companies. So more and more companies are talking about making investments, forward investments. So I think that process is beginning to happen.
All right, Radhika, wishing you and your team a very happy Diwali.
Happy Diwali. Thank you.
Thank you. All right, that's all we had time for on today's show. If you have any feedback for us, the contact details coming up on the screens as we speak.